The world is holding its breath. In the quiet halls of finance, in the bustling ports of global trade, a single powerful question hangs in the air. It is whispered in boardrooms and debated on television screens across continents. The question is sharp. The question is simple. Is the United States dollar dying? This is not a distant academic thought. This fear is real. It is now. It echoes in the headlines of major newspapers and dominates the frantic chatter of financial markets. It is a worry that touches the lives of ordinary people, shaping their concerns about their savings, their retirement, the rising cost of living. This essay will cut through the noise. It will provide a clear-eyed look at the forces challenging the dollar's dominance. The time for clear-eyed analysis has begun. To comprehend the threat, one must first appreciate the throne, you know. What is the US dollar, really? The dollar is the world's reserve currency. This is a title of immense power and privilege. Central banks hold dollars as national savings. It is the financial air that the world breathes. Most international trade is priced and settled in dollars. Oil, gas. This is often called the petrodollar system. This global status grants the United States extraordinary advantages. They line up to buy these bonds as the safest financial asset. It is a unique position that has underpinned American prosperity and influence for generations. The system runs on trust. 80 years of trust in the dollar. The U.S. can impose economic sanctions by restricting access to the dollar-based financial system. That desire is a key motivator for the challengers now at the gate. Now, meet the challengers. A new bloc is rising, and its name is BRICS. The acronym stands for its founding members: Brazil, Russia, India, China, South Africa. They are home to over 40% of the world's population. Their combined economies are a growing share of global GDP. They are rich in natural resources, oil and gas, minerals, agricultural land. A coalition of giants who have decided the old rules no longer serve their interests. The core motivation of the BRICS alliance is a shared belief that the current global financial system is unbalanced. From their perspective, the world has changed dramatically since the post-World War II era when these systems were created. They are not just asking for a seat at the table. They are building a new table altogether. They have established their own financial institutions, such as the New Development Bank, designed to finance infrastructure projects in member countries and other emerging economies. Furthermore, the alliance is expanding. Saudi Arabia, Iran, the United Arab Emirates, Egypt, Ethiopia were invited to join, dramatically increasing the group's economic weight and its control over global energy supplies. The ultimate goal is to achieve what they call de-dollarization. This means creating a parallel system where they can trade with each other and the rest of the world without using the US dollar. Russia and China, for instance, are increasingly settling their trade in yuan rubles. India is setting up mechanisms to trade with other nations in rupees. These are the initial, foundational steps. They are methodically laying the groundwork for a world where the dollar is no longer the only option. What would a new currency from these rising powers actually look like? The idea is still on the drawing board. A clear blueprint is beginning to emerge from the discussions. Instead, the most likely proposal is the creation of a new, common currency for international trade settlements, but as a unit of account for large cross-border transactions between countries. This would be a direct challenge to the dollar's role as the world's primary medium of exchange. One of the most discussed ideas is backing this new currency with a basket of real assets. The US dollar has not been backed by gold since 1971. It is a fiat currency, its value based on faith and trust in the US government and economy. The BRICS nations have proposed a different model. Their new currency could be backed by a collection of commodities, including gold, oil, other valuable resources that the member states produce in abundance. If the BRICS plan succeeds, even partially, the tremors will be felt deep within the American economy. For decades, the world's immense demand for dollars has created a massive, captive market for US Treasury bonds. This has allowed the United States to run large budget deficits, financing everything from its military to its social programs at very low interest rates. This has been called America's exorbitant privilege, a privilege that could be lost. Imagine central banks in Asia, the Middle East, and South America shifting their reserves. Instead of buying U.S. bonds, they hold more BRICS-backed assets, less demand for U.S. debt. To attract buyers, the U.S. Treasury would be forced to offer higher interest rates. This change would cascade through the economy. Federal borrowing costs would skyrocket. More tax dollars would go to interest on the national debt, leaving less for other priorities. Higher Treasury yields set the benchmark for borrowing across the U.S. Corporations face higher financing costs. Slower expansion, fewer jobs. American families feel it directly. Mortgage rates rise. Credit card rates climb. Auto loan rates climb. Household budgets are squeezed, disposable income falls. Beyond borrowing costs, the rise of a BRICS currency could unleash another powerful and dangerous force: inflation. A key reason inflation has been relatively manageable in the US for long periods is the dollar's global status. Because the world needs dollars to trade and save, it creates a constant demand that helps prop up the currency's value. If a significant portion of that global demand evaporates, the value of the dollar relative to other currencies and to real goods could fall. A weaker dollar means that it takes more dollars to buy the same amount of foreign goods. This is the classic definition of import-driven inflation. Consider the vast array of products that Americans buy from abroad: smartphones, clothing, furniture, countless other everyday items. The price of every single one of these imported goods would rise. The cost of raw materials and components that U.S. factories need to produce their own goods would also increase. This would create broad and persistent upward pressure on prices across the entire economy. American families would find their purchasing power eroding. The cost of living would climb, hitting lower and middle-income households the hardest. The Federal Reserve would be forced into a difficult position, likely raising interest rates even higher to fight inflation, further slowing the economy. Global trade patterns would also be redrawn. The current system provides a significant advantage to the United States. Trade priced in dollars simplifies transactions for American businesses and insulates them from currency exchange risk. If a new trade bloc emerges that operates outside the system, U.S. exporters could face new hurdles. They might have to conduct business in other currencies, adding complexity and cost. More importantly, a powerful BRICS economic zone could prioritize trade among its own members, creating new supply chains and trade routes that bypass the United States. This could diminish America's role as the central hub of global commerce. Ultimately, this is a story about power. Economic power and geopolitical influence are two sides of the same coin. The dollar's dominance is a pillar of American global leadership. The emergence of a credible alternative strikes at the very heart of that leadership. A multipolar currency world would likely lead to a multipolar geopolitical world, one with competing centers of influence and different sets of rules. The end of the dollar's reign is not a certainty. It is not an event that will happen tomorrow. The dollar is deeply entrenched in the global financial system, with trillions of dollars in assets and contracts built around it. Dismantling this architecture is a colossal undertaking. The BRICS nations themselves face significant internal hurdles: political disagreements, technical challenges of launching a stable, trustworthy currency. The world still largely sees the US dollar as a safe haven in turmoil. These are advantages that will not vanish overnight. But complacency would be a grave mistake. The threat is real. The trend is clear. The world's rising powers are actively building an alternative. Stay informed. Watch for key signals of this historic shift. If Saudi Arabia begins selling a significant amount of oil to China, priced in a currency other than the dollar, it would be a seismic event. Watch the reserve holdings of central banks. This moment demands sober analysis, not fear. The best way to defend the dollar is to ensure the American economy and political system are worthy of the world's trust. For every citizen, awareness. International finance affects every household. Do not look away.